Hello everybody, welcome to another update on the stock screener. Today I'm going to do a review on Capstone Mining, give an update, as some people wanted to have an update to see what's happening. So let's take a look at the chart first. So we saw a massive rise here, and lately Capstone Mining is just flat, and the whole copper space was flat. So it's really a copper sector problem. Okay, so it seems that we have stalled here at the highs. And that's also a reason why I take some money off the table. It doesn't look like we're going much higher now. So we are still at the highs. It's always good to take some profit. So I'm still very invested in Capstone Mining. That's not a problem. There is no problem. It's just that the valuation is now very high. Okay. So it's best to take some profit and put it in something else that's less valued, like gold miners, for example. So let's take a look at the copper. We also see here a rise in copper, and now it's flat. So it's really a problem of the copper price. We know that China has been dumping copper. So these things here are dumps of China copper, social inventory. These are all dumps from China. Okay, so China is manipulating copper prices. So it doesn't want this copper price to go much higher than this level. And that's a problem for our copper miners, of course. And believe me, China has a lot of copper that they can dump. So that's the first problem. We don't see copper rise anymore. And that will, of course, have effects on copper miners. Now let's do a full analysis on copper. Killian Zhao real economic indicator is very positive. So the economy is growing very fast. That's a good sign for copper. 10-year yield has been rising. Also a good sign for copper. Warehouse levels are still very low. Look at this chart here. The inventories for copper keep going down, and Goldman Sachs says that this will keep going lower until the end of the year. But the latest data here suggests that it's slowing down a bit. So it was going much faster into this direction, but it has slowed down a bit here. I don't know why, but this seems to be a sign to me that maybe this is flattening out, and that would be very bad for copper. So keep watching these inventories. You want this to go much lower in order for copper to go up. If this flattens out, or even worse, if it goes up, then copper could go very low to $4. So watch this. China power consumption was actually very good on the average here. So also a thing to watch. You want this to go higher. Credit impulse, we already know that is going down, but the latest data suggests that we have bottomed out here. Okay, so somewhere in 2022, January, we could see a bottom, but we're not there yet. We are now in November, so still 1 or 2 months to go down, and then we could see a bounce in January. So the China credit impulse looks better now. Shanghai, I think Shanghai is just chugging along. When we look at the long-term chart, it seems to be going higher. GDP forecast was around 0%. So GDP was going down, but now we are in Q4 and they apparently say we will have 6% GDP growth. This is laughable that we go from 0 to 6%. So I expect this to go lower and lower in the coming months. So if you know that GDP is slowing down, then you get into a stagflation scenario. And in that scenario, you should be in gold, not in copper. But let's see and wait and look where the GDP numbers will be going in Q4. It seems very good right now at 6%, but could go down. Copper scrap premiums. These points are buys, but lately we see a rise in that premium of refined to scrap copper. This is not a good sign. So it spiked to 1,700. So that's equivalent of this here, this point. So we saw a spike like this and it went back down, but I don't like to see these spikes upwards. So we got a spike here, went back down, and we are now around 500 now. So we are now around here. But this is a sign that that these zero premiums are going back up. And yeah, that means that copper is going to top out. Okay, it typically tops out around 2.5, somewhere here. So watch this trend. If this goes to here, then you should be worried. We're not there yet, but watch this as well. Seasonality should be good. November, December, January, February, March, April should all be going higher for copper. So no worries there. COT report is a bit worse now. So these were all shorts covering, but now the shorts are coming back. So this is a bit negative for copper in the short term. So as you can see, there are signs that copper is topping out. I'm not that bullish anymore. Let's take a look at the CRB index. Still rising, that's good. Still in a commodity bull market. Bulk shipping rates. Another sign that something is happening. Something bad is happening. Look at this. The bulk index is crashing. Keep an eye on this. If this keeps crashing, then there's something wrong, okay, with the economy. I've been selling my shipping company shares, container shares, because this is not a good sign, okay? Also not a good sign for commodities. The Yardeni forecast is still saying that we're going up, so that's still good. Inflation was very good. We had a lot of inflation, but lately we see this going down. That's also a bad omen. I keep telling you there are a lot of bad omens here. Inflation is also going down. Zillow rent index apparently is going up, so there will be a lot of rent inflation. That's a good sign for copper. Here we see that there's not a lot of growth. So the Brave Butter Kelly index says there's no growth. So I expect GDP to keep going lower. Nenner is saying that copper will be flat here in into 2022, and then it might go back up. Manorino index risk is going higher. So we are now at above 100. Also not a good sign. The higher that this blue line goes, the more risk there is. So of all these checklists items, there are a lot of bad signs. So it's time to take some profit. Now let's take a look at the latest earnings. I mean, the company is not doing that bad, okay? They increased their cash position. Annual guidance is reiterated, and they have record production at Kozamin. That's not bad, okay? But there are some items that I don't like. So let's go over everything. We have production, and the cash cost is 1.96. That's the first item that I don't like. So I have the AISC here. It was lower the last time. I think 1.8. Now it's almost $2. So costs have gone up by 20 cents. I have updated this and I don't like this. So costs have gone up. Of course, due to inflation, but also due to something else that I'm going to talk about. Okay, so next, Pinto Valley has problems. Okay, they had wildfires and floods. So that's some problems there. So there were severe floods in July and August from heavy rains. And that means that there is less mining and milling rates due to wet conditions. 60,000 tons per day. So that's visible here in our production results. So Pinto Valley had some problems, as you can see here. Production is lower than in the first quarter and the fourth quarter of last year. Production is lower. I don't like this. Okay, that's 2 quarters already. But they're saying that this is going back to normal. The latest month was better, but yeah, I hope to see this go back up so that production will be around the 50 million pounds level per quarter. So let's see if they can achieve that. But this is another sign that I'm disappointed with. Okay, so cash went up. That's good. Balance sheet is, of course, enhanced. And nothing to see here. They had some impacts, realized loss on the prices of copper of 10 million. That's just due to the copper price that's going down in that quarter. And EBITDA is a bit lower than I expected because of the production problems. Cash cost was up. Kozamin was doing well. Okay, so Kozamin has record production from 10 and now it's 14. So that's good. Okay, so this is important. Pinto Valley production was negatively impacted by rains. So that's one thing. And this is another thing that I don't like, Santo Domingo. So the discussions are still advancing well. They said that they would have a partner last quarter. We are still discussing. They still don't have the partner. So there are delays here and I don't like delays. So that's another point that I don't like. So here the costs are up 1.8 and now it's $2. Also bad sign, costs are going up. Let's talk about Pinto Valley now. Okay, we know about the rains. Okay, so the throughput is back to normal now in October and September, so we should see a better quarter. Molybdenum is coming back, but that's not a lot of revenue. Head grades are a bit up, that's good. And also the flotation is better. This is another thing. So they have lower byproduct credits on gold. Gold and silver were down, so that's having impact on the costs. Yeah, we are still in a small bear market in gold and silver. I hope that will turn around. Cozamin is doing very well. Okay, but also here you can see the cash costs were higher due to the silver stream with Wheaton Precious Metals. So they sold their silver stream to Wheaton Precious Metals, and that is having an effect on the cash costs, and that's higher. Okay, so let's take a look at Cozamin. You can see here cash costs went from 0.35 to 0.9. That's a huge increase in costs. Huge. And that's because they sold their Wheaton Precious Metals, their silver stream to Wheaton Precious Metals. And of course, less byproducts means higher costs, right? That's something to consider. So going forward, we will see these higher costs at Cozamin. But I think it's still a very good thing that they sold it to Wheaton Precious Metals. Now they have less debt, so they have a better balance sheet. But keep in mind that these costs are here to stay, 2.36. So I changed the numbers here a bit, made it higher, and also this is higher. So that has an impact on my chart here. So the market cap is now more aligned with the fair value of Capstone Mining. It's now exactly fair value because the costs have gone up. Okay. Financially, balance sheet is improving. Let's take a look at the balance sheet. So equity is rising, but probably at a slower pace now. And that slower pace we can see from the price to earnings. It was PE of 6 and now it's PE of 12. Okay. So this is a huge reduction in earnings. So that's why PE is now at 12, maybe 10 next quarter. But I don't like companies with a PE higher than 10. So that's another disappointment for me. Due to the higher costs, we have less earnings and a higher PE ratio. Another sign to me to sell. Price to book is very high, actually 1.75. So you want to buy companies at a price to book of 1. and this is almost 2. So another sign that we are fairly valued here. So for the coming 2 years, I think we are fair valued. And once they build Santo Domingo, then of course we will shoot higher to this level here. But yeah, you need to wait 2 years for that. So I'm a bit impatient. I can't wait 2 years for this to go higher. So I took some profits. But the long-term thesis is still intact. Once they get this Santo Domingo in production, this will easily double or triple. Okay. Then they have some optimizations. I'm not going to go through that. So the optimizations will probably bring production from here to here. So there's a bit of upside for next year. And that will upgrade the value by 20%, I think. So next year we could go up 20% due to better earnings, better production. And then the year after we should shoot higher once Santo Domingo is in production. But I'm saying they are still delaying things. Probably the project is going to be delayed by half a year. So that's a bit of a dot here. Okay, so cost controls. Yeah. Outlook is the same. We are going to still produce between these levels. And cash costs at 1.9. So probably going to be lower in the fourth quarter, the costs. That's good. And that's it. So what do we have more to say here? Cobalt is actually doing very well. Cobalt price has gone up. So that's a good sign. Other than that, this company is still doing well. But there are signs that copper is topping out, not going up that much anymore. Costs are going up, production problems here. So a lot of bad signs, but I still think that this company has upsides in the coming 2 years. So that was the update, and I'll see you in the next video.